Okay, so having just gone through the European cash close in the last 10 minutes or so, just thought I'd jump on and kind of wrap up the day, and really I can encapsulate most of it in the last kind of hour and 40 minutes, really since 3 o'clock. We saw a spark of activity, as you can see on the charts, dollar strength, showcased by the fact that both the major pairs, top left, euro dollar and cable, came under some concerted selling pressure. Gold lower, equities higher. The DAX, you can see, has pulled off slightly, but a lot of this climb here, breaking the early intraday highs from resistance that had been found in the futures around pivot in the DAX, being dragged up by US indices. As you are probably very well accustomed to, these are record highs you're looking at in regards to the S&P, sitting here at 2484 and a quarter. The Dow also, and Nasdaq up at around their best levels. Just looking at the Nasdaq here, having a push and test on R1. So what's the reason for this kind of shake up in the markets and what otherwise was an extremely quiet morning? Has been really catalyst was the US economic data. Two things that came out. Now typically these aren't especially market moving pieces of information, the first of which was one called JOLTS, job openings. And so just for the benefit of those who maybe have not heard of that figure before, job openings refers to all positions that are open but not filled on the last business day of the month. The survey collects around just over 16,000 non-farm establishments, including a variety of different US working sectors, so retailers, manufacturers, and it assesses the unmet demand for labour in the US labour market. It gained attention back in 2014 as it was one of the key metrics that Janet Yellen said that the Fed were looking at to determine this kind of push towards normalisation of policy a few years back. It's kind of fallen out of favour a little bit, or out of Fed focus, given the Fed, as we know right now, are much more engaged with the inflation environment to make their decisions on monetary policy for the rest of this year, in terms of the sequencing of the balance sheet tightening and the final rate hike, which we're looking for in December. But what has happened here is JOLTS has come out, and if I show you the graph, it might make a little bit more sense. This was the figure. So essentially we had the JOLTS job openings for June, 6.163 million. That's quite a bit above expectations of 5.775 million. In fact, if we look at the breach of 6 million, as you can see here, much more job openings than was in the prior month, and actually than what we've seen in the last 12 months. If you extrapolate that out to the maximum, then you can see here, since JOLTS had started being collated back in the early noughties, this is the highest on record. That also came amid the latest in IBD tip economic optimism, and this is the highest reading we've printed since March. This was also above expectations on Wall Street. So kind of a dual fold of better than expected North American data. And as I said, typically these data points would not have much of an influence on market price. But if you think about how quiet the market has been in the last day and a half, just to remind you, the S&P is now 73 trading days. The S&P has increased by no more than 1% in any one day. The fact that we closed less than 0.3% higher yesterday, a run of less than 0.3% moves in either direction in the S&P. It's now been 13 days since we've had a larger move using daily data going all the way back to the 1920s. And so ranges and volatility as defined by the ultra low level in the VIX has been extremely low. Volumes are low because this is the summer season, which typically is quite evident then in the way the markets react during the month of August. And then what this has almost created is a very quiet morning that we had specifically today. There was some trade data overnight from China, which some saw as a little bit disappointing. Both exports and imports were lower than expected. That did have a slight negative connotation to Asian markets last night. But then what has happened is almost the market needed a reason to see some movement to break out of these tightly formed ranges, and certainly the US data seems to have been the catalyst. That then consequently resulting in the breaks of technical levels tends to exacerbate the move. Stops get triggered, momentum picks up, algos trade that, and then you can see it almost self-capitulates in a way, and the move becomes a lot more violent than maybe what the fundamental itself would warrant. Now if we look at cable here, looking at a 30-minute candlestick, you've had a break originally of the S1, which was a pretty important level, that also defining the low prints that were in play from yesterday's session. You start drawing out the cable chart, on a slightly longer time frame, and we got close to a key support level that was seen down back on July 20th, around 129.56. The low printed just 10 pips above that earlier before we've had a bit of a bounce. Just from a price movement point of view, what does tend to happen is the selling comes in waves. That's something to be aware of. And then, as I said, markets looking at these key technical levels, stops of which then tend to make the move look more exaggerated than might often have been the case. But this reflecting of a pretty risk-on move in terms of the correlation set up on the back of this movement in the last 2 hours. The dollar strength weighing on both pairs. Cable obviously sub that 130 psychological level. And 1 second. Have you taken it? Don't tell me you took it early. Okay, one of our traders had been in a good trade here, which was our daily strategy, playing the low from yesterday. This is one of our interns. Entry at that S1, riding it through pivot, R1. Then they took it all the way up to R2, so really excellent trade. They then got back in at R2, and she was had a target at 85, and obviously we've just popped through there at the moment, but she'd already got out of the trade. But nonetheless, very good day and a good trade on that asset. But yeah, risk on reflective across these different assets. So dollar strength, these equity majors following suit, and hence then the yen had weakened in the early part of the session, as to gold. Gold seen down top right about $5, and with the pressure of under the weight of rising US equities, US yields on the ascent meant that T-notes as well gradually grinded down, and we're down about 8 ticks at the moment, down towards the lower bound of, as you can see here, my T-note chart just showing at the moment, that was the payroll move that we had on Friday, the good jobs data forcing US yields higher. And so we've just had in these still fairly quiet markets a retest of that 125.29 level. Okay, quick look at the calendar for tomorrow, just to wrap things up for the day. And in the overnight session, following on from the trade data from China, we still continue to remain focused on that country specifically in overnight session. You got the inflation readings, CPI, and the PPI numbers. And then just coming out through the European morning, it's pretty quiet until we get into the crux of the US session. Just seeing what we've got on the docket here, wholesale inventories, but these are revisions it looks like, and then you've got your EIA, that's your Department of Energy crude oil inventories. This of course follows at 9:30 this evening the American Petroleum Institute inventory levels, which will obviously set the precedent for what we're expecting for tomorrow. Okay guys, keep an ear out for those numbers later on this evening. I'll post them on Twitter and so on, because we'll be out the office at that time. But I'll recover that again at the market briefing tomorrow morning. Until then, hope you've had a good day. I've been monitoring some of the trades that you guys have had. Dara on the yen, particularly well done. Michael on gold as well. So have a good evening, and I'll see you again tomorrow. Thank you very much.